What's going on, guys? Kevin Cage here with another crypto update. Let's dive into some recent news today. So first up, this came out today by Ripple. We can see Ondo Finance brings 24/7 access to tokenized US Treasuries on the XRPL. So this is really good news, and per the last video, when we went through the list of crypto assets that were made in the United States, we can see that Ondo is also in this list, and it's ranked number 32, so it's a sizable project, already one of the biggest in the RWA space. So looking at this news, we can see Ondo Finance, a leading tokenized real-world asset issuer, is bringing tokenized US Treasuries to the XRP ledger, expanding institutional-grade products on-chain. Through this collaboration, institutional investors will gain access to Ondo short-term US government treasuries, we can see OUSG, backed by the BlackRock US Dollar Institutional Digital Liquidity Fund. So just to repeat this slowly, through this collaboration of the XRP ledger and Ondo, investors will gain access to the Ondo short-term US government treasuries, and then from there, they can be instantly minted and redeemed 24/7 using the Ripple US dollar. Alright, and just a few more important points here, and we'll keep moving. We can see that Ripple and Ondo have secured commitments to seed the short-term government liquidity upon initial deployment, driving further adoption of tokenized RWAs on the XRPL. We can see Ripple's highlighting that this is an expansion of Ripple's investments in tokenized US Treasuries, also referring to the Open Eden T-bill. And also, once again, we're seeing a bunch of organizations pointing this out. The tokenized asset market is set for explosive growth, with forecasts predicting it will reach $16 trillion by 2030. And briefly touching on this group, so Open Eden, we know their connections with Arbitrum, the XRP ledger, and Ethereum, and they have over $119 million in TVL. And I believe in the future, virtually everything is going to be tokenized, every single IoT device, on and on and on. But initially, for financial instruments, T-bills are some of the easiest versus other things and other asset classes, such as real estate and commodities. And I believe that because T-bills are short-term government debt, they're actually included in the market valuation of the global bond market, which is over $100 trillion. Now, we're already starting to see platforms tokenizing precious metals, real estate, fine art, and it's going to keep growing, but why are T-bills easier to tokenize? They're already standardized financial instruments, they have clear terms, there's transparent issuance, they also have yield, and they already have clear legal clarity, and they're regulated by the Treasury, the SEC, and the Federal Reserve. When you compare other asset classes like real estate or commodities, they face a bunch of jurisdictional arguments and battles and legal issues. And there's plenty of potential in a variety of markets and asset classes, but that is just a key reason that T-bills are a lot easier for platforms to initially tokenize or digitize. And what's cool about T-bills is they provide yield, and that makes them attractive for tokenization and DeFi. And I really love this website, RWA.xyz, and as you navigate to this website, you can actually enter this platform just clicking the top right here, and we can see the total RWAs on-chain in US dollars, so just over 16 billion. And considering the tokenization estimate by BCG of a $16 trillion market by 2030 of tokenizing globally illiquid assets. So for simple math, we're going to say we're at 16 billion when you compare to the potential of 16 trillion. So 1,000 billion is 1 trillion. So if we did the math of 16 billion divided by 16 trillion, that is 0.1%. So this number would have to go up almost 10x to even be 1% of the actual estimate. And the thing about these websites is I think they're super helpful, but I don't know how accurate they really are, but this is the best one that I know of. And as we scroll down, we can see which types of RWAs are being tokenized today. We can see commodities at 1 billion, and when we think of gold, its market cap on 8marketcap.com is 18 trillion, whereas silver is still under 2. And I also like this RWA league table showing the top 10 networks in terms of the total value on their protocols today. So bottom line, the future of real-world assets is a real thing. We don't know which ones are going to be the guaranteed winners, but ideally, the more assets that are brought on-chain and are tokenized, there's going to be some degree of interoperability between several networks. Whether we hit these estimates or not, this is the potential. So anyways, hopefully this news is the first of much more to come for institutional-grade financial solutions with this collaboration of Ondo Finance and the XRP ledger. And what's really cool about Ondo is this. They're the first tokenized US Treasuries platform to surpass the $600 million TVL milestone. I also really like this tweet by Roth, and this is pointing out, just like this guy says, Jevons Paradox. So the cheaper and more efficient that these LLMs become, or these large language models in terms of computation, they're going to keep getting cheaper and more efficient. And paradoxically, according to Jevons Paradox, because they're more efficient and cheaper to use, this actually drives demand up. And from here, basically discussing because this gets more efficient, the demand is going to be exponential for ASI, which is artificial superintelligence. And he points out that it's going to be the key focus, and energy needs become a lesser constraint than expected per unit of compute. And basically think of this like a giant feedback loop. So with ASI development, this is going to require a huge amount of computes, and this is going to create a big cycle. So think of, first, we have cheaper computation. That leads historically, according to Jevons Paradox, to more adoption. When we have more adoption, what happens? We have more builders, we also have more advanced AI, and bigger and smarter large language models, and then from there, it leads to greater demand for compute. So Jevons Paradox is interesting because sometimes when you think the cheaper or more efficient something becomes, that would lower demand, but often it actually stimulates more demand and more adoption. One of my favorite blogs years ago was by Galgatron in the XRP community, drawing parallels between XRP and payments using Jevons Paradox. So as payments become cheaper and more efficient, it actually leads to higher demand. Basically, Jevons Paradox is as costs get lower and efficiency gets higher, you don't actually see less demand, you see greater overall consumption. And even just applying it to crypto networks and transactions or payments, the lower cost and faster speed of any transaction, this actually reduces friction. So what does that mean? Users and companies will usually make higher frequency transactions. So what does that do? That increases demand and liquidity. But anyways, let's finish up and we'll take a look at the price charts we have shared by Cointelegraph, the Fed decision in January. So tomorrow, the Federal Reserve will decide what to do about interest rates. So we're going to see if there's going to be no change or what's to come. And other than that, looking at these cycles, on the Bitcoin monthly, there have been no major changes, so I'm just kind of waiting if we're going to make or break this level with the RSI to see if the market pumps or we don't. And either way, I still believe as long as, during any pullbacks, Bitcoin's monthly candle bodies hold above the 8-month EMA like we've done during previous cycles, I still believe in other cycles here. Last cycle, we really didn't pull back at all. There was tons of QE, and Bitcoin just kept running, at least during this initial impulse. I'm not talking about this because I'm focused on the peak of the RSI for each cycle. But in 2017, once we started doing our first major moves, Bitcoin back to back just kept coming back and pulling to the 8-month EMA, but the 8-month or the monthly candle body held above this level the entire time. So as long as I see that during any pullbacks, even if we see scary flash wicks at any point in 2025, like we did here, a flash wick all the way down to 49K, but the monthly candle body was holding over this orange EMA. I'm still believing that a bull run is here, and Bitcoin ends between 150K minimum to maybe 250K. That is my super basic range on the monthly and weekly, just based on fibs and things I'm looking at RSI. Does it go higher? Does it go lower? We'll find out. So really just waiting for Bitcoin to see if we can make a decision for up and down, and I'm watching Bitcoin dominance. We've climbed up a bit. Overall, nothing has changed. I'm waiting for the actual big crash, and then I'm excited for alts. So especially when Bitcoin dominance, I almost said Bitcoin RSI, actually breaks below the 50-week moving average, this yellow. So I'm waiting for us to actually lose this level like previous cycles and previous alt seasons during the big crash as Bitcoin is creating higher highs. How long does this take? I have absolutely no idea. Just based on previous cycles, it was usually pretty quick, but you just never know. If you enjoyed this video, be sure to smash the like button and let me know your thoughts down below. You can find all links to my crypto resources, including tools for charting, trading bots, wallets, portfolio trackers, and exclusive discounts right in my link tree in the video description. Thanks for watching, and I'll catch you in the next one.